I think there's also sometimes like in coverage of it, a little bit of a backwards view, in my opinion, which is like the fact that PayPal and Stripe getting involved in stablecoins is so good for the stablecoin industry. But in reality, it's like these guys are going to get disrupted. They have this massive legacy tech stack, and they need this technology to stay competitive.
Welcome to the Defiant podcast. I'm your host, Vinny, and today we're talking to Megan Knab, a co-founder and CEO of Franklin, a crypto-first payroll company. Before that, she was VP of Finance at Serotonin, a Web3 marketing firm. And yeah, you've been working in accounting in the crypto space for, I guess, the better part of 10 years now, right?
Almost.
Crazy.
Oh, that ages me.
No, it makes you wise and experienced.
Yes. Yeah, it's been a minute.
Yeah, so I'd love to talk about your background in accounting. It's one of those, less glamorous parts of what makes the world go round. Mm-hmm. Can you share a little bit about your early experiences in crypto and how that intersected with your work in accounting and how that all eventually led to the creation of Franklin?
Yeah, for sure. So right out of school, I got a job working on Wall Street in a back office doing the very kind of like office space grunt work that I think a lot of people think about when they think about accounting.
Paper pushing?
Yeah, pushing papers around, manually confirming wires with the bank. When Hurricane Sandy hit New York, actually, we, like me and another person in the department, had to actually go in. Like I walked from my apartment in Queens downtown to run payroll for the company.
You got your steps in.
Yeah, for sure. Yeah, I mean, if it wasn't clear then something needed to change, so I worked as an accountant for about 5 years. I was going to Baruch to get my MBA at night and learned about Ethereum actually in business school, which was, random. I had a very progressive, forward-thinking professor.
Was it part of the curriculum or just it came out in conversation?
It was, so Nate Popper, who's a New York Times journalist, I think, had just come out with his book, Digital Gold, and he came and gave a lecture to our class. And kind of simultaneously, I had uncovered this multi-million-dollar accounting fraud happening at the company that I was working at. Oh. And it was just this weird confluence of a lot of things happening at the same time. And I was like, Ethereum is the solution for corporate greed. And got really excited about it. I rage quit my job. That was, I was like, this is
relatable.
So yeah. I got a job working at Consensus and I was basically like, I am an accountant, but I'll do anything. And that's kind of the first few steps I took into crypto. That was in 2016. So there was nobody doing crypto accounting for the most part then. I think there are a lot of things that led to the genesis of Franklin. But that's the kind of base of having this kind of traditional skill set jumping into an emerging market. So
yeah. And so you've built back office systems within Web3. Can you tell us about some of the lesser known challenges in doing that?
Yeah, I mean, it's changed so much over even just the last 2 years. Before, I think there was a big problem with data availability. And so that in a lot of ways has been solved where you can find human readable information about transactions on chain. There's so many subledgers out there. So I think that that's been really helpful. Something that I was struggling with when I was running finance at Serotonin was just figuring out how to, we have real world bills. We are getting in revenue in crypto. We need to pay people out in cash or crypto. And so figuring out how to merge these two worlds, there are very few companies that can really just totally operate on chain. And so, prototyped Franklin within Serotonin, thinking about okay, let's see if we can streamline all of these inflows and outflows. And it worked great. And there really wasn't anything else going on in the market at the time. So that's how it started.
And how do you approach, the volatility of crypto? Because I'm thinking about, Payroll with, for example, Ethereum, which just a couple months ago was worth a lot less.
Yeah.
And 6 months ago, a lot more, right? So
Yeah.
how do you kind of like deal with that volatility when you're dealing with bills and payroll, that's going to be probably USD versus crypto payments?
Yeah. I mean, I think like it depends a little bit on like where you are thinking about in the financial stack. With payroll and like bill pay in general, like there are a lot of regulations, like there are a lot of labor laws in the United States about how people can be paid. And it actually kind of emanates back to like Appalachia, where people were getting, who worked for coal mining companies were getting paid in like company certificates. But it meant that they could never actually like leave their town. They could never get out from
grapes of wrath.
Yeah.
Hello.
Yeah. So after that, there were a bunch of like state labor laws sort of like came about. So, and they actually apply to crypto now as well. So if you are working for a company and you're an employee in the United States, you can't legally just be paid in that token. You have to be paid in a fiat equivalent currency. And so taking a look at some of like the rules that we know exist was kind of like one of the first things we did. And when launching Franklin, we offered a bunch of different currencies. We had a couple companies that used wrapped Bitcoin or wrapped ETH to pay out bonuses, but most companies and most of our customers today still just use stablecoins.
Yeah, going off of that, I noticed that that Franklin often works with ERC20 tokens like wrapped Bitcoin or stablecoins. Is there a reason you wanted to work with those instead of a native token like Bitcoin, Ethereum, Solana?
Yeah, it's because we're smart contract based. So just ERC20s work with smart contracts. We're also EVM based. So yeah, from a technical perspective, that was the reason why.
Path of least resistance.
Path of least resistance, but also it's like a really beautiful technical solution to something that in the TradFi world is like really patched together, like super manual, and a smart contract automates a lot of that processing logic. So that's kind of the genesis for it.
Ooh, the coders in our audience are going to be really, really happy with that take. So in a 2022 CoinDesk article, you highlighted how intermediaries like payday lenders and check cashers cost Americans $15 billion annually, which is kind of a lot.
Yeah, it's a lot.
So given crypto's focus on getting rid of intermediaries, it's something we're very hyped on, how could eliminating these middlemen positively impact employees?
Yeah, for sure. There's a lot of ways. And so one of the innovations at Franklin is actually, it's like a self-custodial payroll platform. So we're actually never taking custody of our customers' funds. It's literally just a peer-to-peer transaction that happens on chain, which is cool. That is not like a paradigm that exists in TradFi at all. There's also just like the power of stablecoins. There's a lot of upside to them, but one of them is that you can just move money a lot faster. That makes moving money a lot cheaper. So we could think about like the different ways that businesses will start having to incentivize their teams going forward when you have this new paradigm that's a lot cheaper to use. There are some companies that use programs called earned wage access, where it's supposed to be like a perk where you can claim your paycheck a little bit early, but it's actually sort of these like complex loan agreements, and it's a modern payday lending type situation. And so our theory is just like, we can just pay it out faster. You can hold on to your cash for longer, and it's a better experience for everybody.
Eliminate the T+3, please.
Yeah.
So many crypto companies are remote first, and many of them have employees all around the world, which we love. It's more decentralized, more cool, more global. But of course, that can create some friction when we're talking about payroll. So can you tell us more about how crypto-first payroll infrastructure can support employers and employees beyond the obvious cross-border payments that stablecoins make way easier?
Yeah, I mean, I think that it's interesting to see like how employment trends have changed over the last like 5 years or so. Serotonin, the company that I was running finance at, where I started Franklin, started during the pandemic, and it was 100% remote. Like they still don't have an office, I think. And being able, I think like when you are running an international business, and this is, sorry, I meant to say like a trend that other businesses have taken up as well. Like it is much more in vogue to hire globally now than it ever was before.
One good outcome of the pandemic, I suppose.
Yeah, one good outcome. Yeah, exactly. Yeah. But yeah, I think that having a global team, you almost in the past had to have a bunch of local infrastructure in every jurisdiction where you had people. You still now have to comply with obviously like labor laws for wherever people are. But yeah, operating on chain, you just have one network to deal with instead of a bunch of different banks, a bunch of different FX providers, things like that. So
simplicity is a beautiful thing. You've also stated that, quote, payroll is one of the fundamental building blocks for the health and wealth of society. Can you elaborate a little bit on that?
Yeah, for sure. At least in the United States, all of our social services boil down to a paycheck. If you have to pay child support or if you have to have your wages garnished, that flows through to a paycheck. Our health insurance, all of that stuff
Social Security.
boils down. It's a really complex data problem. And there are lots of examples of these kinds of industries, but it is highly monopolized by the largest players.
Shocking.
Yeah, right. So for us, when I was starting Franklin, it was actually really hard to figure out like, how do you actually calculate a paycheck? So the tax code is open source, but it's actually not available anywhere. Like there's no central repo for it. And that was one of the first problems. One of the first problems we had to think about how to solve. So, there are two large companies that basically have a tax database that all payroll companies purchase. And so for us, being able to move money faster, we want to be able to have more real-time information. And so building our own tax calculator is one of the first things that we had to do. But yeah, it's the basis of society, Medicare, all of our social services, it all boils down to a paycheck. So.
Yeah, that's fascinating. Obviously, money rules the world. So I was thinking in that context, but yeah, whenever you're thinking about, how we support one another, paying taxes and all that, like it can get complicated pretty fast.
The ultimate community tool. So.
Right.
The PR Genius is a top crypto PR and growth marketing agency, helping brands globally with expert PR and strategic growth marketing. They've worked with 300 plus projects like Movement Labs and IO.net. Unlike traditional agencies, they charge only on performance. Their services include earned PR opportunities and marketing services to help boost wallet holders and organic X followers. Learn more at www.theprgenius.com.
So let's talk a little bit more about stablecoins. There are, of course, one of the biggest, trends in the news right now as far as mainstream coverage of crypto.
Yeah.
And a lot of that is because of certain bills getting passed, not passed. So let's talk a little bit about the Genius bill. What are your thoughts on this bill and its potential implications?
Yeah, I mean, if I zoom out and just thinking about it as an American citizen, it's kind of interesting that crypto is the only kind of like bipartisan issue going through Congress right now. Specifically, the Genius Act, I think, is a net positive for the industry. We have generally had to rely on stablecoin issuers being trustworthy. And the industry has come up with some standards or peer pressure to have some level of disclosure in stablecoin reserves. And so the Genius Act really makes it, sets a standard for the kinds of disclosures and audit requirements for issuers, and also kind of gives a permission structure for TradFi financial institutions to start playing in the stablecoin space. So I think overall it's a net positive. We'll see what happens in its final form and how it might interact with some of the other legislation that's also, moving forward. But net positive, I would say. I think stablecoins are like having a moment, and hopefully it continues. So
It's going to be like hot stablecoin summer.
yeah. Somebody should meme that. Yeah.
Started here.
Yeah.
So one of the Genius Bill's requirements is for firms to hold a reserve of assets that is equal to the value of issued stablecoins. I can't help but point out that banks are not held to the same standard. Do you think that is a good thing? Do you think it's, a hindrance? What's your take?
Yeah, I mean, I think it's kind of almost just saying the obvious in some ways where, like in TradFi, we have fractional reserve banking where banks can lend out a certain % of their balance sheet. And that's, how our money supply grows. I think a lot about MakerDAO from like back in the day and how their protocol actually evolved from having a single source of collateral and then having multiple sources of collateral. This kind of requirement is sort of, like drawing on some of the evolution from like the MakerDAO protocol days, I think. But I think it's, good for consumer protection. It's good for US dollar global dominance. There will be an increase in desire for T-bills and things like that. So if you care about that stuff, that's, it's net positive. I think it's good for the end consumer as well.
Yeah, I've been seeing a lot of work in the crypto sphere that's talking about like benchmark rates on chain. Now we're talking about stable coins being more widespread. Stripe and PayPal are both utilizing stable coins. So do you think that these kinds of assets within the crypto realm are going to kind of be that gateway for more traditional investors and maybe, the normies who they hear about crypto and they're like, what?
Yeah, I mean, I think like a lot of the crypto industry right now, there's just like a lot of good vibes around some of these bigger brand names getting involved in stablecoin tech. One thing that I think we should be careful about as an industry and as people who operate on chain and operate in this space is sort of like capture by these bigger sort of like payments players or even like government players, where if you look at the current iteration of the Stripe stablecoin product, it's like extremely expensive to use. Like we looked at it, like maybe we integrated at Franklin, and it's insanely expensive to use.
Really?
And
that's fun.
Yeah, I know. It's like kind of like, well, maybe more price compression will happen as more players get involved. But, if Visa, just we don't want stablecoins to all be sitting on the Visa rails, The innovation behind this technology is that it is peer-to-peer, and it should stay that way. And if Stripe and PayPal want to come in and participate, they're welcome. But I think it's something to be wary of a little bit.
Like you can come to the party, but don't bogart the party.
Yeah, exactly. I think there's also sometimes like in coverage of it, a little bit of a backwards view, in my opinion, which is like the fact that PayPal and Stripe getting involved in stablecoins is so good for the stablecoin industry. But in reality, it's like these guys are going to get disrupted. They have this massive legacy tech stack. And they need this technology to stay competitive. And so that's kind of the angle that I approach it from. It's like, took you long enough. So.
Get 20% APY on ETH with the High Growth Vault by Kelp in one click. High Gain uses blue chip DeFi strategies with restaked ETH across Aave, Pendle, Usual, and Elixir. Managed by strategy pros Ultra Yield and Upshift to deliver highest rewards on ETH, all in just one click. Deposit your ETH, receive high gain ETH, and stay liquid in DeFi. Trade or use high gain ETH on platforms like Pendle and Balancer while still stacking rewards. Follow along these steps to get started.
Some critics of the Genius Bill, including our fave, Elizabeth Warren, our favorite hater, Elizabeth Warren, they've called the Genius Bill insufficient. And she's even gone to say no bill would be better than a weak one. Do you agree or disagree with this perspective?
I mean, like philosophically, sure, a weak bill is, not great, right? I think that a lot of US politics, you're talking about one subject, but you're really talking about something else. And so I've like read a bunch of some of her comments. Like, she is concerned about the Trump organization getting involved in crypto with issues around self-dealing, and is kind of like, my understanding is trying to hold this bill a little bit to try and create accountability elsewhere. Like, it's a strategy. Like, I don't like it, right? As somebody who works in the stablecoin space. But, I think this kind of discourse is important to have. I think it's an okay perspective to bring up. But, ultimately, like, the US has got to kind of get moving on crypto. Like, we are very far behind in terms of creating a sane regulatory regime for startups, for businesses. So, let's get it moving. So.
Well, and, this lack of regulation is hurting people, and I think I always wonder, like, how much of this is part of their game to make crypto look bad? Because we have, we don't have regulation for how the organizations should be set up. And that's how you get an FTX collapse. You know, that's how we get all of these, these headlines that make us look like we're an industry of scammers, right?
Yeah.
And so how do we approach regulation in that way?
No, I think that's a really good point. Like, this kind of, like, willful ignorance or not wanting to take it as a serious issue has caused a lot of harm, like FTX being a massive example of that. There's some level of the US has the most sophisticated capital markets infrastructure in the world, and that moving slowly is a feature and a bug, right? And there's also some level of, you don't want regulators or legislators to get so far ahead of the ball where the technology is evolving so quickly. I'm of the view, having audit requirements and disclosures, those are good things. Let's mandate them. And if there's something else that we need to do secondary to that, pass another bill. The fact that Congress, is just not
maybe do your job.
Yeah. So that's what I would say is, some rules are better than no rules, and let's just get it out there. I think that a lot of the stuff that's in the Genius Act is common industry practice. And so let's just put the stamp on it and keep going.
It's so funny to me when it's of course you should have some guardrails in place.
Yeah.
And I think crypto is sometimes split down the middle when it comes to the people who are pro-regulation for everything we're discussing than the people who are maybe anti-regulation because regulation can stifle growth.
Yeah.
But the thing about, crypto being literally a global thing is it seems like they have to be really smart about just how are stablecoins specifically going to benefit or, be bad for the American people. Yeah. And I think that should be the main driver between the regulation versus these conversations around whether the president is going to benefit or not. I feel like the attention should be on the American people, not on an individual.
I think the thing that scares me about crypto in the United States is that it is becoming more of a political issue. And really, it is not a political technology. It is meant to really operate separately from governments.
In spite of governments, one might say.
Bitcoin was born out of the 2008 financial crisis. And so there's some reality here where it's I'm a US citizen, I want to service US businesses, I want to follow the rules, but I want to, not have so much intervention where, you're, hamstrung from moving forward or from offering a good service. I think that in the past couple years, the biggest winners in the crypto industry for a large part have been law firms who, you get your venture funding in and then spend a lot of time with lawyers trying to figure out corporate structuring, risk management policies. And there is ultimately, there has not been a clear path for a lot of founders, for a lot of people who want to operate on chain up until now. So I think it's generally good, but, arm's length, it'll be a win if we get it done, I think.
Yeah, I love that you brought up lawyers because I have found that when you're talking to people in crypto and specifically in DeFi, it starts to feel like you are interviewing a legal team. Yeah. You know what I mean? It's they're clearly saying whatever they're allowed to say and not a word over it. And I mean, do you think that's just because of fear of the SEC or just the government getting mad at them retroactively? Because that's something I think a lot of people don't see. Like, because of the lack of regulation, you might see a form of insider trading or like a form of these nefarious activities, but because it's not in the code, it's not technically illegal. But people are still, very careful about what they're going to say.
Sure.
So.
Yeah, I mean, I think there's some level of discipline that like great founders have around sticking to talking points.
Stick to the script.
I think, but yeah, I mean, you know, there's a lot of fear. I think like when I was starting up Franklin 3 years ago, the idea that we were going to launch in the United States was, I feel like some of our early investors were kind of like, yeah, she's crazy, let's try it. Like going to market in the US, like in a very highly like regulated market is insane.
Right.
But, you know, in some ways, like because there were more rules for like around labor regulations, it's almost easier because we have some framework already to try and operate in. But yeah, the lawyers, I think, do a good job of scaring people. And you know, it's necessary. I'm subject to it too. Like my lawyer's like a great friend. So shout out Teddy. But yeah,
yeah, totally. So there are a lot of stablecoins out there and more coming out each day. Even earlier this year, we have the Trump-backed crypto firm World Liberty Financial launching USD1. And I know that stablecoin is probably part of what Elizabeth Warren and other Democrats are thinking about when they're talking about wanting to stop Trump from, you know, benefiting financially from stablecoin legislation. But with so many options out there, how do you decide which ones to utilize, both on a personal level and with your business?
Yeah. Well, the position of Franklin is like, we're never prescriptive to our customers about like what assets they should use. We have some limitations, like we won't transmit or help transmit securities because we're not a licensed broker-dealer. But for the most part, it's kind of, you know, the assets that you want to be using, you can use them, check a couple boxes to make sure it's legal, go for it. You know, personally, I think like there are a lot of things to consider, and there are going to be way more in the very near future as more institutions start playing in the space. So like Santander, for example, announced, I think today, that they were launching their own stablecoin. Like, I think we'll see that kind of playbook play out from a lot of different banks.
Oh my God.
Yeah. I mean,
that sounds dystopian to me for some reason. I can't imagine why.
It's going to be weird. It's going to be so weird.
I would love, you know, $JPM stablecoin.
Yeah, I mean, they had JPM coin. So, which, you know, these like interbank settlement processes are so complex. Like,
right.
And I had a moment working in equities brokerage. Like being able to, settle transactions between institutions, like a public blockchain is a perfect solution to these kinds of things. But yeah, the vibes are going to be weird. Like, it's also weird to me, like the Van Eck Twitter handle is like very degen. And I'm like, who are you guys? Like what, you know,
what intern did you hire?
Yeah, exactly.
to remake you?
So I think we'll see more of it. You know, personally, I like assets that are not like, within a closed network. So, you know, it's not really around as much anymore, but like MakerDAO, like those were, I think we'll all look back as an industry and be like, single collateral DAI, the multi-collateral DAI upgrade, like that was maybe the coolest thing that crypto has ever produced.
I'd love to hear more on that. What made it so cool for you?
Yeah, I think it's just this idea that it could operate autonomously on chain is just like, you know, I think crypto itself, like at a technology level, is like pretty simple tech, you know? Like
it aims to be, right?
Like, yeah, like smart contracts, right? If then statements, like it's not like quantum, you know, or something like that. And just like being able to have that kind of like application use case to be able to create money from your own money is just like genius. I thought it was so cool. So
yeah, and I think it actually makes those concepts a little more accessible to people because, you know, it's really interesting working in DeFi and getting to see the convergence of traditional finance and how to enhance it or make it more available to the public through blockchain technology. And so I'll be curious to see how stablecoins and how, collateralized debt can like really bring new wealth to people who don't work in the banking industry or who don't have that expertise.
Yeah, for sure. And I think that this kind of like scarcity is really like, there are people in areas of the world that don't have access to traditional financial services that do use this. Like if you walk around Buenos Aires, right? Like you can pay out a lot of point of sale systems using stablecoins on Tron, as an example. And that's been, there are other examples of that. And it's almost like here where we have very sophisticated financial infrastructure, it is so slow to adopt. But yeah, it's going to be wild.
Oh, that's a great point. Yeah, places that are still developing might just skip all the stuff that we've been dealing with for the last few decades and go straight to stablecoins.
100%.
Why not?
Yeah.
Skip the line.
Goat Network is the first sustainable BTC yield chain, powered by decentralized sequencers using multi-coin POS. Goat's mission is to transform BTC and Doge from passive holdings into active, yield-generating assets through a one-of-a-kind economic model that tokenizes sequencer revenues, unlocking the full potential of BTC-Fi and meme-Fi in a way that's never been done before, and creating new yield opportunities for Bitcoin and Dogecoin holders. Supply BTC or Doge, earn BTC in perpetuity. Get started through our user rewards onboarding portal, onepiece.goat.network.
A lot of the time when we think about crypto in places like Latin America or Africa, we think about the ability to use an asset like Bitcoin as a store of value against, something like the Argentine peso, which can drop 80% in value overnight. And we've seen this happen in recent years. So do you think stablecoins are a better asset for these more developing economies versus something like Bitcoin or Ethereum?
Yeah, I mean, I think a couple things about that. One, I think of Paul Brody, who runs the global blockchain business at Ernst & Young. He says Bitcoin is the asset and Ethereum is the platform, and he's trying to draw this distinction of like, yes, Bitcoin is a store of value. I think the narrative around it being digital gold is like, it trades closer to gold now
than it does that was
other
crazy.
assets. Yeah. So yeah, I mean, we'll see.
Yeah, I saw that on the news and I was like, well, digital gold, I guess we have backed by gold.
The other thing I think is like, a stable coin is stable to what? Stable coins are largely an orchestration of the US dollar right now. And so if you are pegging a stable coin to a currency that is volatile, that stable coin will still have, the same, it's really just a layer of, whatever fiat you're dealing with. And so, to me, it's kind of like, we can actually, not that we should, but get the US dollar into more areas of the global economy. Like, I think it's going to really cement like US monetary policy or like monetary, dollar dominance.
Interesting. I've definitely seen conflict with the US government and something like Bitcoin because Bitcoin's kind of positioned itself to be anti-USD, right? To be not working together, but like something you want to have instead of. Do you see stablecoins kind of flipping that script and maybe being something that the government might be more welcoming to because it is potentially going to share that dominance of USD throughout the world?
Yeah, I mean, well, on the Bitcoin point, I think it's so weird, this industry in so many ways where like a lot of people lauded the Bitcoin ETFs, where it's like, okay, we're putting Bitcoin on traditional like equities rails so that more asset managers can get exposure to it. And it's like, ETFs on Bitcoin would be cool, or ETFs on, another like chain like Ethereum. Like that would be real innovation, And so like, let's not lose the plot, I think, to your point.
Yeah, we may not have a political ideology, but there is an ideology there.
Yeah, exactly. So I think, stablecoins really are, kind of an antithesis to that Bitcoin value prop.
But maybe it's a Trojan horse.
Yeah, I mean, it could be, right? And technically, like the Fed and like the issuer of like monetary policy in the United States is separate from like the elected government.
Right.
And like, hopefully it stays that way.
Fingers crossed.
Yeah. If I were a government leader, having assets on a public blockchain is a great tool for power. And it's a little scary. Like, I think that's another thing that we should all be aware of is like, you can see everything happening on chain. You can very easily exclude people or, like blacklist them off. So, should a government like take up issuing stable coins? Sure, it's a great idea for a government. Like, is it a great idea for its population? Like, maybe not.
Whoa, careful. We're going to start giving the Trump administration some ideas.
Yeah, well, I'm sure there's no new ideas here, but yeah.
Yeah, no, it's really fascinating to see what's happening. And I didn't see stablecoins as being the thing that would get us into these conversations and having, the words crypto coming out of so many politicians' mouths. But Are there any other pieces of legislation that you're kind of hoping will come out of this or come next?
There is something that I'm kind of hoping for. It's not exactly related. It's not at all related to stablecoins, but the SEC has rules around accredited investors that I think are just so whack and need to change, where basically people who are not already rich cannot participate in certain kinds of markets and get access to certain kinds of investments.
And the buy-in is crazy, right? It's like you have to make $200,000 a year for 3 years in a row and or have $1 million in the bank.
Yeah.
It's like, definitely working on that.
Yeah, right? Like,
but don't have enough Bitcoin to be investing in anything.
Right. And
like
also to get an accreditation, like a lot of these valuators like still won't touch crypto and stuff like that. So you have people who have, like crazy crypto net worth that like can't get, still can't get that kind of, I think it's changing, but I think it's just fundamentally like so unfair. And it's meant to protect consumers where, the idea is if you have assets, you're smarter than everybody else or whatever.
I mean, of course, rich people are the smartest.
So I think, a lot of people, I think, acknowledge that it has to change. And Hester Peirce at the SEC, crypto's favorite commissioner, has been a big advocate of that. And it's like another thing, like, let's just get it done. So
absolutely. I mean, I think this is something that really needs to change in 10 years ago, really. Yesterday is just how do we make sure that Americans have the access to instruments that will help them build wealth? Because we're really seeing, this stagnation in wages. We're seeing, it's really hard for Gen X, millennials, and Gen Z to own property. So what is going to be the solution here if all of these other routes to making money and building wealth are now too expensive for young people? What's the plan here? And can it please be better than investing in Pepe coin?
Yeah, for sure. And I think also, if you talk to the average crypto investor, like they know a lot of stuff. Like they understand a lot about what they're doing and they're gambling or whatever. But I think a lot of people in this industry are extremely educated about what they're doing. And
you kind of have to be though, right?
Yeah.
Because it's not easy to get into crypto. I feel like there's so many, that's kind of ironically one of the benefits of there being so many steps to being able to buying the crypto and then putting it into your hardware wallet and all of this, right? So it requires you to do a little bit of research, but by that same token, it's keeping other people out who either just listen to the bad news or are not willing to do all those steps. Yeah,
100%. And I think to your point, when I first started working and actually had money for the first time in my life, I tried to set up an account at Schwab, I think, and they wouldn't let me do it because they were like, well, we'll only open up an account if you can deposit X amount of money. And I was like, I can't just invest like $500 in the stock market.
And this is why Robinhood is
Robinhood has really
eating people's lunch.
changed the game in a lot of ways. I used to work at a digital broker called Drive Wealth, where they powered investing for like Cash App and a bunch of other these like digital wallets. So I think that there's certainly like a renaissance going on in like equities brokerage and things like that. And it needs to happen more in crypto.
Absolutely. Yeah. So why don't we finish off with a quick lightning round?
Okay.
Quick hits.
Ready?
Ready?
Yeah.
Ready to be struck.
Yes.
Okay. Favorite stablecoin.
Single collateral DAI.
BTC price at the end of 2025.
Let's go with a cool million.
Love the sound of that. And are we looking at another DeFi summer?
Yeah, I mean, every summer is DeFi summer, I think, now, so for sure.
Well, thank you so much, Megan, for being here with us. Where can our audience find you to follow for more tips and tricks and more payroll insights?
Yeah, for sure. Follow us at Franklin Payroll on Twitter.